Hello and thank you for joining us for another MacDesk Floor Report. I'm Rebecca Darst from the MacDesk. Today is Thursday, October 27th, and the Dow is up 208 points right now on a big short squeeze following news overnight out of the Eurozone summit. As you may have heard, EU leaders persuaded European holders of Greek government debt to take a 50% voluntary haircut on their holdings. Now, as you might imagine, the term voluntary is somewhat arbitrary, given that the alternative was the certainty of a Greek default. However, the International Swaps and Derivatives Association, that's ISDA, issued a preliminary statement today indicating that they regard the bond restructuring as voluntary and non-binding on all bondholders, which means that nearly $4 billion in credit default swaps will not be triggered on the agreement. So Angela Merkel may have shoved some backs to the wall here, but ISDA regards the haircut as voluntary, and that's chasing the shorts out of the market. The EU also boosted the size of the European Bailout Fund, the EFSF, to €1 trillion and passed measures forcing the region's banks to bolster their balance sheets to the tune of €106 billion. So what that's going to do to European credit remains to be seen. And we still have lots of peripheral risk out there among other southern European countries, to wit Italy. So this is a short-term rally with lots of long-term issues yet to be resolved, very much in keeping with the siege-like aspects of the European debt crisis so far. That said, we saw the market rally more than 200 points off the open on volume nearly double the average of the past month. Right now, we're seeing the S&P up 26 points at 1268. It's lost a little steam off the opening rally after an unsuccessful test of 1274. That's the 200-day moving average, a big technical level to watch as we last traded at that level intraday back on August 2nd, before what we like to refer to as the guns of August entered the market. Let's not forget the data on the calendar today. Before the open, we had Q3 GDP out at 2.5%. That's the best growth number for the year so far and was right in line with expectations. Now, most sectors of the economy contributed to the net gain, and the 2.4% net increase in household spending was a nice upside surprise. But the jobless claims released concurrently showed new claims coming in at 402,000. Again, we seem to be stagnating at that 4-week moving average, so it's clear that the growth that we're seeing in the broader economy has not yet reached a self-sustaining momentum sufficient to ease unemployment. We're also keeping busy with earnings season. We had more than 100 companies reporting after the bell yesterday, around 200 reporting this morning, and most of those numbers are solid. In major currency crosses, the news out of Europe has pushed the euro higher against the dollar. The cross is up 1.6% at 141.29. Some of the strategists we're following think the cross will fail at this resistance level and may move lower from here, so we'll see about that. And take a look at the VIX. After pulling in about 7% yesterday to close just shy of the 30 level, it's collapsing today. We are down 13% in the VIX and trading below 26 right now. That's a discount of nearly 2 points against the November VIX future. Amazing. So for more market insights, check your inbox at 1 p.m. for the midday. For now, this is Rebecca Darst from the MacDesk signing off.